As a freelancer in Nigeria, you enjoy amazing benefits, from the flexibility of work hours to the independence of being your own boss and the ability to work with multiple clients in and outside of Nigeria. However, with this independence comes the responsibility of managing your taxes. It is already tough enough that you are managing multiple clients and deadlines. Adding tax to that will make it unbearable. The good news, managing your taxes doesn't have to be a nightmare. In this video, we will break down everything you need to know about managing your taxes as a freelancer in Nigeria. Whatever your field is, you will learn step by step how to stay compliant, avoid penalties, and even keep more money in your pocket. Hi, my name is Olatunji Abdulrazak. I am the founder and CEO of taxmobile.online. Welcome to my YouTube channel, A Stitch in Tax Saves Cash. This channel is dedicated to helping you stay on top of your taxes. We will provide you with tips and strategies to help you keep more money in your pockets and minimize your tax liability while you stay in compliance with tax laws. So if you want to start taking control of your finances from today, hit the subscribe button below and click the notification bells to stay updated on our latest videos. Let us start with a simple question. Who is a freelancer? A freelancer is an independent professional who offers services to multiple clients without being tied to a single employer. Freelancers operate in diverse fields such as writing, graphic design, IT, services, consulting, and more. But with this independence comes responsibility, especially when it comes to taxes. Freelancers in Nigeria are categorized as self-employed individuals, making them responsible for specific tax obligations such as 1. Personal income tax. This is governed by the Personal Income Tax Act and applies to all individuals earning an income in Nigeria. Freelancers pay personal income tax through the direct assessment system, which requires that they self-report their income and calculate tax liability. 2. Value-added tax. Freelancers whose annual turnover exceeds 25 million naira are required to register for and remit value-added tax, which is charged at 7.5% on goods and services provided. 3. Withholding tax. Withholding tax is deducted at source by clients as an advance payment of income tax. The rates vary between 2% and 10%, depending on the nature of the transaction. Business premises levy. Freelancers operating from a formal office may be subject to a business premises levy imposed by state governments. Company income tax. Freelancers operating as a registered company, e.g. a limited liability company, are subject to company income tax instead of personal income tax. Now, let's go over the essential steps for managing taxes as a freelancer. 1. Understand and register for taxes. To stay compliant with Nigerian tax laws, freelancers need to take 2 key steps. 1. Register with the Federal Inland Revenue Service. Here, they will obtain tax identification number for transactions involving VAT and withholding taxes. Register with State Inland Revenue Service. This allows freelancers to pay personal income tax in their state of residence. 2. Maintain accurate records. Good record keeping is essential for tax compliance. Freelancers should track invoice and payments. Keep all receipts and invoices for income received. Business expenses. Record all deductible expenses such as internet cost, office rent, and tools. Bank transactions. Use a detailed business account to separate personal and business finances. 3. Calculate taxable income. Taxable income is what remains after subtracting allowable deductions from gross income. The key deductions include consolidated relief allowance, which is the higher of 200,000 naira or 1% of gross income plus 20% of gross income. Mandatory pension contributions, deductible as required by law. Charitable donations, contributions to approved organizations may reduce taxable income. File and pay taxes. Freelancers must adhere to strict filing and payment deadlines such as personal income tax. Annual returns must be filed with the State Inland Revenue Service by 31st March. The direct assessment system calculates your tax liability based on declared income. Value added tax. Monthly VAT returns are due to Federal Inland Revenue Service by the 21st of the following month. Withholding tax. Ensure that withholding tax credit notes from clients are collected and used to offset tax liability when filing returns. 5. Leverage tax reliefs. Freelancers can reduce their tax burden by utilizing available reliefs such as consolidated relief allowance automatically applied during tax computations, capital allowance applicable to depreciable business assets like laptops and office furniture. Approved donations. Deductions are allowed for donations to approved organizations. Manage withholding tax deductions. Withholding tax is deducted by clients at source, serving as an advance tax payment. As such, freelancers should collect withholding tax credit notes from clients. Use the withholding tax credit notes when filing personal income tax or company's income tax where applicable to avoid double taxation. Use of technology for tax management. Freelancers can simplify tax compliance by using accounting software. Tools like QuickBooks and Zoho help track income and expenses. Tax platforms. FRS e-tax platform facilitates VAT filing and payment just like the Tax Promax. Financial management apps. Tools like Wave and Expensify assist in expense tracking and budgeting. Seek professional tax advice. Tax laws can be complex and subject to frequent changes. A tax consultant or advisor can help freelancers by ensuring accurate tax filings, maximize allowable deductions and credits, guiding them on tax planning and compliance. Even with a solid understanding of tax obligations, freelancers often encounter unique challenges along the way. Let's take a look at some of these common challenges and how to effectively address them. 1. Fluctuating income. Freelancers often experience irregular income. Setting aside a portion of earnings for taxes can mitigate this challenge. Late registration or filings. Delays in registration or filing can result in fines. Stay organized and aware of deadlines are essential. Inadequate record keeping. Poor documentation can lead to errors in tax filings. Utilizing technology can help maintain accurate records. Unclaimed credit notes. Failure to collect or use withholding tax credit notes can lead to higher tax payments. Requesting and properly documenting the withholding tax credit notes can help offset tax liabilities. Why tax compliance is important. Tax compliance isn't just about following the law. It has real benefits for freelancers such as building credibility. Tax compliance improves trustworthiness among clients and stakeholders. Avoiding penalties. Staying compliant prevents costly fines and legal issues. Unlocking financial opportunities. Proper tax documentation is often required to access loans or business grants. In conclusion, handling taxes as a freelancer in Nigeria requires understanding your tax obligations, maintaining accurate records, and adhering to filing deadlines. By registering with the appropriate tax authorities, leveraging available reliefs, and seeking professional advice, freelancers can simplify the tax process, remain compliant, and reduce their tax burden. Effective tax management is not just about fulfilling legal requirements, it is also a vital aspect of building a sustainable freelance career. Thank you for joining us on this enlightening journey. If you have any questions or want to share your thoughts, feel free to drop them in the comments below. And if you found this video helpful, don't forget to like, subscribe, and hit that notification bell for more insightful content. Also remember to watch our previous videos.